China has urged India to shed its reservations and join One Belt and One Road initiative or OBOR. So while inviting India to participate in the initiative, Chinese Foreign Ministry spokesman said Belt and Road Project or OBOR is to promote connectivity and common prosperity for all countries. China clarified that if India joins the project, it will not change Beijing's stand on Kashmir issue. China has been reiterating that $50 billion CPEC, which traverses through Pakistan-occupied Kashmir, is a connectivity project and will not affect its stand that Kashmir issue should be resolved between India and Pakistan through talks. India had boycotted two-day Belt and Road Forum earlier this year, which was attended by leaders from 29 countries. New Delhi has voiced strong reservation over China-Pakistan economic corridor. Meanwhile, Japan has proposed a strategic dialogue with India, US and Australia to build ports and high-speed road networks across Asia and Africa. The plan is aimed at countering China's massive One Belt and One Road initiative or OBOR. The proposal will also promote free trade and defense cooperation across Southeast, South and Central Asia and beyond Middle East and Africa. The cross-border infrastructure is expected to boost India's trade and help countering Chinese influence in the region. Japanese Prime Minister Shinzo Abe is expected to propose idea of four-party dialogue to US President Trump early next year. And moving over to Saudi Arabia, where with a view to reduce its dependence on oil economy, Saudi Arabia is working on $500 billion megacity project. And now Saudi Crown Prince Mohammed bin Salman said nation is in talks with some of the world's biggest companies to develop technologies that will power life in $500 billion city he's planning to build on the Red Sea. And NEOM, as the project is known, is due to open for business by 2025, with limited operations expected as early as 2020. Now, Prince Mohammed is trying to steer Saudi Arabia away from oil dependence, something that few major economies have managed. So Saudis are talking to Amazon and Alibaba over the new city. The $500 billion megacity has to open by 2025. The new city's limited operations are expected as early as 2020. European plane maker Airbus is also in talks for the project, and app-driven new city will be entirely automated. And Saudi Prince Mohammed is trying to steer Saudi Arabia away from oil dependence, something that few major economies have managed, and he keeps moving goalposts to make the plans more ambitious. The social and economic changes outlined since 2015 already include selling a stake in oil giant Aramco. It will be a IPO worth $100 billion, the largest in the world, and ending a long-standing ban on women driving cars. This week, Prince Mohammed announced the city project and also said he will transform religious bases of Saudi society and make its austere version of Islam more moderate. Prince Mohammed envisions an app-driven city that is almost entirely automated and responsive to the needs to its residents. The first robot in NEOM will be NEOM itself, he said. And Saudi Arabia now has a brand new citizen, and it's no ordinary human. In fact, it's a humanoid. It has become the first country to grant citizenship to a robot. She is called Sophia and is a humanoid created by Hong Kong-based Hanson Robotics to assist seniors and visitors to parks. Announcement of Sophia's citizenship came in the lead up of the Future Investment Initiative held in Saudi capital Riyadh. Sophia expressed honor and pride on receiving the citizenship as she spoke to the panel. Saudi citizens, however, did not share Sophia's emotions. They took to social media to criticize their fellow citizen for not wearing an abaya or being accompanied by a male guardian, acts dubbed illegal for women in Saudi Arabia. And moving to India, where Indians' love for property is well known across the world. No wonder Indians have become the biggest property buyers in Dubai. Indians bought property worth rupees 42,000 crore or $64 million in Dubai from January 2016 to June 2017. So Indians are the biggest property buyers in the state of Dubai, and Indians have bought property worth 42,000 crore in Dubai. The property was bought from Jan last year to June this year. Indian buyers have invested 30,000 crore rupees in 2014. So in the next 2 years, it's almost jumped 35%. Well, this is an increase of 12,000 crore from 2014, when department recorded Indian buyers investing 30,000 crore rupees that year. This was more than a quarter of total sales of 1 lakh crore rupees of non-Arab property investment in 2014. For years, Indians have consistently been the most prolific non-GCC buyers of Dubai real estate. And if we talk about preferences, Indians prefer, we can say that apartments first, then they come to villas, and then they go to lands. So Indians, they buy apartments first, and second preference is for villas, while the third preference is for land as far as Dubai property is concerned. And billionaire entrepreneur Richard Branson's space tourism firm WION Galactic has now invited interest from Kingdom of Saudi Arabia, that is fast trying to reduce its dependence on oil economy. Saudi Arabia's primary wealth fund plans to invest about $1 billion in British billionaire Richard Branson's 3 commercial space companies, including space tourism firm WION Galactic. So Saudi Arabia will invest $1 billion in WION Galactic. It is a space tourism firm, and Saudi Arabia's fund will get significant stake in space firms. WION Group will still remain the majority shareholder of the company, and Abu Dhabi investment firm also has a stake in these companies. WION Galactic is conducting test flights of its Spaceship 2. The specific date for its first customer space flight has not been released yet. And moving to tech world, where Amazon.com has gained approval from a number of state pharma boards to become a wholesale distributor, reports said, citing public records in the US. The news sent shares of US pharma chains Drug Wholesale and Pharmacy Benefit Manager Express down. This is because they are expecting a huge competition from Amazon if it enters online pharma business. And Amazon will enter online pharma business, reports have said. E-commerce giant has got pharma licenses in many US states. Amazon, in fact, is hiring talent to assess drug retailing market. The news sent the shares of US pharma chains down because these pharma chains will be meeting unexpected competition from the e-commerce giant. And drug wholesale scripts were also down on the news. And if it happens, this will enable Amazon to enter into a whole new territory. Online pharmacy business is already very popular in India. Early this month, a source-based report by CNBC said Amazon would decide before Thanksgiving whether to move into selling prescription drugs online. The e-commerce giant is reported to be in talks with mid-market pharmacy benefit managers and has been hiring talent to assess the drug retailing market for its entry, reports said. IT giant Microsoft has reported better than expected quarterly profit as demand for its cloud computing services for companies rose and its personal computer software business stabilized. Microsoft's focus on fast-growing cloud applications and platforms is helping it beat slowing demand for personal computers. It has already hurt sales of Windows software that powered company to the top in 1990s. Revenue from Microsoft's intelligent cloud business was up by nearly 14% to $6.92 billion in Microsoft's fiscal first quarter, and it's September 30. Microsoft said Its commercial cloud annualized revenue run rate reached $20.4 billion in the quarter. And from Microsoft to Twitter, finally there could be some good news for Twitter, as it may become profitable for the first time next quarter after slashing expenses over the past year and ramping up deals to sell its data to other companies, which could help break its reliance on advertising for revenue. Shares of Twitter soared more than 18% to $20 in afternoon trading yesterday. Twitter also said user growth resumed in third quarter after stalling in prior 3 months. Twitter has never had a profitable quarter based on generally accepted accounting principles or GAAP, but said it will likely be GAAP profitable in the fourth quarter if it hits high end of its estimates. Social media company Twitter has struggled to convert its appeal among celebrities and public figures such as US President Donald Trump to attract users and advertisers amid fierce competition from Facebook and Snapchat. Twitter has worked in recent months to sign live streaming deals and make other changes to improve user experience. The revenue from data licensing and other sources in the third quarter was $87 million. Twitter said it is up 22% from a year earlier. That helped cushion an 8% decrease in ad revenue. And staying with tech world at a time, there is a growing debate over equal or unequal patent rules. Means if a fridge maker should pay a different rate for crucial patents than a car maker, Apple, Volkswagen, BMW and Daimler have warned EU regulators that adopting patent fee guidelines which favor Qualcomm and Ericsson could hurt consumers and hinder innovation. Sources say the latest commission draft favors patent fee model used by world's #1 smartphone chip designer Qualcomm and Ericsson, which predominantly and they dominate the tech industry, and it is based on how much value a tech adds to a product. It is opposed by Apple, Google and others in Silicon Valley who favor fixed fees. Volkswagen, BMW and Daimler said issue was of a particular concern for their industry, where cars increasingly resemble digital services because of use of wireless technologies. The non-binding guidelines could provide a basis for future EU rules. And the latest in Brexit negotiations now, British lawmakers will debate its key piece of Brexit legislations in Parliament on November 14 and 15. This will be a difficult process that will test PM Theresa May's authority. The bill has faced widespread criticism from lawmakers of all parties, including May's Conservatives, for giving the government too much power to change laws and also for not guaranteeing Parliament a vote on the terms of Brexit. The bill has been expected earlier, but government said it needed time to look over proposed changes, which will be discussed in the next stage. And moving to India news, where India has overtaken the US to become second largest smartphone market in the world. An analysis indicates India grew its mobile phone shipments by 23% from previous year. It received just over 40 million smartphone shipments in the third quarter of the year. Mobile brand Xiaomi and Samsung, they account for nearly half of the total market in India. Xiaomi shipped 9.2 million units, closely trailing Samsung's 9.4 million in the country. Other key factors driving the rise are Indian consumers, increasing emphasis on long-term evolution and country's low smartphone penetration. There is a race of a different type currently going on in Indian corporate and investment brokerage sector, as many as 14 companies have expressed an interest to collaborate with the government in the role of transaction and legal advisors for the divestment of national carrier Air India. The Department of Investment and Public Asset Management, DIPAM, had earlier invited expressions of interest, or EOI, for appointing transaction advisors and law firms in assisting the strategic sale of carrier. The BAMA deal includes an operating fleet of 142 aircraft comprising 65 A320 aircraft, 15 B777 aircraft, 24 787 aircraft, 23 737-800 aircraft, 11 ATRs and 4 B747 aircraft. Now, among the investment brokerages that bid for a role of transaction advisor are KPMG, Ernst & Young, Rothschild & Company, BNP Paribas, ICICI Securities and Edelweiss Financial Services. The top law firms interested in giving legal advice to the government included Hammurabi and Solomon, Cyril Amarchand Mangaldas, Shadul Amarchand Mangaldas, Crawford, Bailey and Luthra & Luthra. And London has seen a jump in tourists from India who are increasingly spending money in the UK capital. India's economy is rising while Britain's pound is slumping with the uncertainty over Brexit. It is the weakening pound that has made a holiday in UK more affordable. And WION's Mandy Clark has the story on this.
There's some good news for the British economy, and that's thanks to India. Spending by Indian tourists in London's West End was up 38% year-on-year in July, according to a new report. Visit Britain says the average spending by Indian tourists in the UK was 74% higher than the all-market average.
What we've seen in the first half of 2017 is a rise of Indian visitors 45% on the same half of the year last year. And we've seen increased spend as well. So spend is up 19% as well, which accounts for something like £220 million into the UK economy. So really, really significant numbers. And each pound that's spent in the UK economy creates an additional job. So Indian visitors are really important.
Over the past decade, the value of the international Indian tourist market has grown by 150%, rising from £4.7 billion in 2005 to £12.5 billion in 2016. Indian visitors have outstripped typically high-spending West Asian visitors.
Since the Brexit referendum, the pound has dropped 11%, and that has led to a spike in international tourists who are taking advantage of the cheaper prices.
I just show the Charing Cross to Trafalgar Square. And this is my next Buckingham Palace.
Yeah. We see the wheel from the train.
London Bridge, London Eye.
The report says the UK was the 10th most popular destination for travel, second to France in Europe, with Indian tourists preferring to visit Gulf countries and the United States.
The UK is now in the top 10 of outbound destinations for Indian visitors, but we don't take that for granted and we want to increase it. We want to see more Indian visitors come. So we have to fight much harder than we ever have done to encourage visitors from all around the world to come here, but particularly in India, where we're seeing really affluent and developing middle class who have a penchant for travelling, and we've got to make sure that Britain is their destination of choice.
India's overhaul in its goods and services tax is resulting in a fall in the taxation of economy flights from 5 to 6%. London is hoping to say namaste to even more Indian visitors. Mandy Clark, WION, London.
So clearly Indians are going more and more to UK, and apart from other things, this is important for UK, especially Brexit is happening, because when the Brexit happens, there would be a certain fall in many industries' output, and many industries would be depending a lot on other people. But tourism is an industry that is ever growing, and Britain should not lose its significance as far as Brexit is concerned and tourism is concerned. And as we saw the report of Mandy Clark, our London bureau chief, she has filed this report, and we are joined by her from London itself. Good evening to you, Mandy. And we saw this report of yours where Indians are increasingly going to UK. Apart from good weather, what are the other factors that are attracting them, Mandy?
Really, it's what the appeal seems to be largely that drop in sterling, making it just a more a holiday where you can get more out of. Before, when the pound was incredibly strong, you couldn't get as much bang for your buck. Now, with that ability with that drop in sterling, and also the rise in the Indian middle class, the more affluent, they want to go out and they want to see things, and they have that disposable income. So it looks like because of Britain's kind of drop in currency, the rising strength in the Indian economy, is seeing that trade-off, has seen this influx of tourists come to visit London.
All right, Mandy, thank you for talking to us and getting us important details. And as we spoke to our London Bureau Chief Mandy Clark, Indians are going to London more and more. Many reasons are responsible. First, good weather. Second, the pound rate is falling for Indians. And London also needs Indian more and more because after Brexit, clearly there will be certain industries that will go down further. And that moment, Indians and the tourist season of India will be much awaited season in London. And let's move over to markets. Markets in India today didn't keep pace with the bull run, and today they came flat. When they ended, they were flat because of a choppy trading session. The markets in Europe are in green though. And so if you talk about Indian markets, they are clearly not, we can say that they didn't do very well today. And to talk more on markets, we are joined by our analyst for today evening, Mustafa Nadeem. Good evening to Mr. Nadeem, and I would like to again ask you, how do you see the trade happening next week when we will have the first month of November?
Today the market has done session and we have seen some profit booking happening at higher levels, but I see the bullish trend to continue next week, and I see a breakout above 10390 in the next week, and traders can have a long position with a stop loss of 10290, where if it crosses 10390 we may see level of 10450 and it can go to as high as 10600 next week. So I think the results would have a major impact, and since we have seen the results are in line with expectation, so this bullishness would continue next week also.
And a question on global markets, Mr. Nadeem. How do you see global markets faring going forward?
Globally, if I talk about US, today would be another spectacular day for US market, and we may see again a new high because of the kind of results the technology shares have been showing, and Amazon and Baidu has given good results. So I think this would continue, and today we also have GDP numbers. So I think a strong GDP number would take markets to a new high. So this bullishness would continue for next week also as far as US is concerned. Europe, again, the numbers are very good, and that's why European stocks have made a new high today also. So I think the overall, if you see every market, all major Asian markets, Europe and US, the earning numbers are in line with the expectation, and that's the taking market to new high.
And can we quickly touch the banking stocks that jumped 2 days ago? How do you see the future for banking stocks in India? Can we quickly get the answer from you, Mr. Nadeem?
The banking stocks have seen a spectacular run after the bank recapitalization plan was announced. But I think there might be some halt now, and some minor profit booking can be seen. But that should be utilized as a new entry point in the banking stocks. Those who are left out in the PSU rally, they should utilize that dip in banking, because overall, when the credit scene improves, it would take banking stock to new higher level, and we are also expecting some decrease in rate. So these both things are very positive for public sector banks, and it would take them to new levels. So I think any dip should be utilized for buying the banking stocks.
Thank you, Mr. Nadeem, for talking to us and getting us all these details. As you're talking to our guest Nadeem, Mr. Nadeem here, Indian markets have remained flat for most of the day today. That's all today we have in this edition of WION Wallet. For more news and updates, stay tuned to WION, and thanks for watching us.